You're watching Business Trends Today exclusively on ASBN.
For many entrepreneurs and business owners, qualifying for a traditional mortgage hasn't always been easy. As more Americans earn income through businesses, consulting, and other non-traditional paths, the lending industry has been evolving to better serve those borrowers. Joining us today to walk us through what's changing in the mortgage landscape is Tom Hutchens, who's the president of Angel Oak Mortgage Solutions. For more than 25 years, he's been experienced in mortgage industry and has spent much of his career focused on building lending companies, developing strong industry relationships, and expanding access to specialized mortgage solutions. So Tom, thank you so much for joining us in the studio.
Great to be here. Thanks, Joe.
The reason we wanted to bring you in is two reasons. One, I'm a customer of yours. As a small business owner, you guys were there for my mortgage and said, wow, this is great. As we all know, there's many small business owners and entrepreneurs right now that are out there that they find it tough to move up in their homes and get that next big home without a lender saying, we got to have last 2 years tax returns. We got to make sure that everything is, you've got all the income that you needed. And as a small business owner myself, I can tell you that the tax return doesn't always align with what you're taking out of the company per se, right?
Without a doubt.
Yeah.
And not only that, I would say that it doesn't even tell the picture of whether or not you have the ability to repay a loan.
Yeah, good point.
And that's really where Angel Oak and what we do
Yeah.
was born on that thought.
That's right. So talk to us about that and tell us a little bit about the history of mortgages and then how you guys did kind of evolve out of the need of small business owners looking for
I mean, I think it's kind of just, I'll do it really quickly, but
Sure.
following the great financial crisis when the mortgage industry really imploded and housing real estate, it was such a mess, and it was a lot of blame was given to the mortgages that had been originated prior to.
That's right.
So what happened is the pendulum swung the other way.
All the way.
It went to where anybody could, we used to say fog a mirror or get a mortgage.
Right.
It went to the exact opposite. You had to fit the very tight Fannie Mae agency box.
Right.
And if you didn't fit that, you didn't get a mortgage. And a big part of that was income, tax return. Fannie Mae looks at your income, 2 years worth, just like you said.
Yep.
And it's that net number. What is the net number? And then they move on. You either qualify or you don't. And so we thought, there's borrowers out there in the early 2010, 2011, the opportunity we saw was these non-agency borrowers, self-employed borrowers, they're very underserved, completely underserved.
Yeah.
But that doesn't mean they're not qualified to buy a home and deserve to buy a home and get a mortgage.
That's right.
So that's really what Angel Oak was born under. We also, just for discussion's sake, back then there were a lot of people that had gone through foreclosures. Remember all those foreclosures that happened. So Fannie Mae also had a rule, you couldn't get a mortgage for 7 years if you had a foreclosure.
Okay.
But we all know a lot of those foreclosures were just simply strategic.
Yes, right.
It wasn't that they were bad credit borrowers. They just were way upside down on a property during the boom times. So we also, those were kind of our targets, were those that had a credit challenge that they couldn't get over, but still good borrowers.
Sure.
And then the self-employed business owners.
Sure.
And we've stuck with this foreclosures, that's kind of gone away because it's not been an issue since 2012, really.
Right.
But the self-employed borrowers with the gig economy and the growth that we're seeing there, we feel like that's just, it continues to be a great opportunity for people.
Right.
And a lot of it is just simply awareness.
Yeah.
I'm so thrilled to know that you know about us because
I do.
because you're a customer, but there's a lot of
right.
self-employed people out there that don't think they have access to a mortgage.
I know. I've spoken to a number of them. They're like, we'd love to buy that big new house. Our business is doing great, but we don't have the tax returns per se that represents that. So,
Absolutely.
They're kind of thrown out of the traditional mortgage company offices, you know?
Yes.
So if you're out there and you're looking to, get a house, and you guys do jumbo loans, I should say. So that's another aspect of it that usually even is under greater scrutiny from traditional mortgage houses, right?
Without a doubt.
Yeah.
And in fact, our average loan amount is higher than agency loans, much higher.
Right.
And we do loans to $3 and $4 million every day.
Great. That's great.
So
Yeah.
it's a really a great source for business owners to become a homeowner, or as you said, move up into to the next big thing.
Right. So I'm sure that the viewers are going to want me to ask, how do you make them? What do you base it on? I happen to know, but you tell the audience.
Well,
if it's not based on the income, I mean on the tax return, what are you basing it on?
So we do have a regulation that every mortgage for a owner-occupied or even a second home, a borrower has to demonstrate their documented ability to repay.
Okay.
ATR is what we all talk about in the industry.
Yeah.
So what we do is creative. We have different avenues to take a borrower down, just depending on what their situation is. But the majority of it is we look at bank statements.
Okay.
We look at 12 months bank statements at a minimum,
Yeah.
or 24. 24 is a deeper look, but a minimum of 12 months bank statements. And we look at those deposits over the 12 months, either in a business account or a personal account. And we use that to generate or to determine what a borrower's ability to repay that mortgage would be.
Sure. And to your point earlier, I think that's even a better way to do it than if you were to look at a tax return anyway, right? Because that's the real deal right there.
Yes. The tax code and your tax return really doesn't tell a lender what that person's ability to repay a mortgage is.
Yeah.
But bank statements, we're looking every single
looking at
month.
cash flow. You know what's
And in
coming in.
fact, Fannie has considered even moving to what we do because the performance of our loans has been so great, because we can really see that a borrower, hey, look at all this cash coming in.
Yeah.
Yes, they have money going out, so we have to put an expense factor based on the business that they're in, and it's reasonable, and that's how somebody qualifies for these mortgages.
That's great. That's great. It really is. Because many of the business owners that I know, have we've talked about it before, where it's like, my gosh, our business is doing well, and we can afford these mortgage payments and what have you, but it's tough finding that mortgage company that's willing to do that. Let's switch gears a little bit. How is business from your perspective? You're looking at all these applications, which means you've got the hand on the pulse of what's happening in the real estate field. How are things looking?
Well, real estate at a macro level, we still have home price affordability issues. And people have talked about interest rates, but there's been so many things that have moved against homeowners, property taxes, homeowners insurance, interest rates. Prices, it's just really, it's been kind of a perfect storm of everything has gone up and up and up. So there's still that issue. However, homeowners are pretty when somebody wants to become a homeowner, they work hard for it.
Yes, they do.
And so they plan for it. And as long as somebody has a good cash flow through these bank statements, down payment, there's no longer 100% financing. That's gone away. So you need a down payment, and you need your business needs to be doing well, and then you have lots of options.
But you don't need 50% down.
No.
I was told by one lender at one time, where he's like, well, I could probably get you down if you do 50% down. Oh, thank you so much.
Well, people would know that as a hard money loan. Hard money loan, that's when you're talking interest rates in the teens and lots of fees and all. That's not what we do. We do really more traditional type financing. 20%,
you really do.
20% down, 25, something like that. We can do as little as 10% down for the right person. So,
and truth be known, you charge a little bit more on the rate, but it's the difference between getting a home and not getting a home. So, for business owners, they're like, no problem. I'll pay the little bit more on the rate side, to get the home that I want.
Without a doubt. That is true. And that's why we've had and continue to have a lot of success with these loans, because they understand it's that or could continue renting.
Yeah, that's right. And if the loans are performing well, then there's always a plethora of those investors that go, we'll keep loaning, Tom. We'll keep funding.
Investor interest continues to grow. I was about to say it's peaking, but it's really not. It's just continuing to grow. People around the world love to own U.S. real estate. And owning it through mortgages, that's great.
For sure. Some of the uncertainty that we see out there, is that such as tariffs, and now we've got wars and all kinds of oil prices, and does that affect your business much, or are you?
Well, any type of uncertainty affects really, who does it not affect? So people trying to make it, deciding if they want to make a long-term decision about buying a house when all these things in the world are going on, that creates an uncertainty,
Yeah.
and some people might hesitate.
Yeah.
But generally, no. I think the biggest thing is inflation was a huge impact to the mortgage business, to the real estate business,
Yeah.
because rates went from record lows, the rates in the threes that we all know about,
Yeah.
to going to 7 in 60 days.
Yeah, yeah.
That was a big shock to the
Right.
real estate market and to borrowers all over the country.
No question.
But
What's your take on the fact that the president's going to be replacing Powell as the Fed chief with his own? I mean, everybody's probably thinking, well, in May and June, we're probably going to see a substantial rate decrease.
Well, I think everyone's been counting on it, including myself.
Yeah.
Certainly anybody in the
Yeah.
real estate sector has been counting
Right.
and hoping for that.
Right.
But there's just so many other factors. You mentioned a war in Iran. That's gas prices that were
Yeah.
just kept going down and down and down, which is great for the economy and great for inflation. But now they've kind of done a U-turn and they're going up and up and up. So we'll see what happens over the next couple of days, and I'll give you a better answer.
Yeah, right. Exactly. I just saw a report that said that now the average age of a first-time home buyer is now 40 years old. That's very unfortunate. Everybody bought them in maybe their mid to late 20s, maybe early 30s. But I mean, with all of the reasons that you just mentioned in terms of affordability factors out there, 40 years old. I mean, and if it's a 30-year mortgage, you're not, even if you stay in that house, which most people don't,
Right.
you're in there until you're 70 till that thing's paid off.
Yeah, no, that's a real issue that we have in the U.S. that we're all talking about ways to address that, but affordability is what that comes at. The reason it's 40 years old is because people have to save so much more money.
That's right.
There aren't starter homes anymore for $100,000. They just don't exist in any metropolitan market. So you're talking starter homes that are $500,000.
I know.
That's
That's
a lot
crazy.
for somebody to take down in their 20s or whatever age. So
and then they also are maybe not there in terms of earnings until they're 40 years old to be able to service that mortgage payment.
Yes.
Yeah.
So I think the real challenge that we have is that the current administration talks about it a lot, but a lot of the costs that are the challenges in real estate are really at the local level, at the county and state level, regulation. The federal government can't fix what it takes a builder to build a house in Atlanta, Georgia, because that's based on the counties and restrictions and all that. So it's a big one. It's a tough one, and we talk about it all the time because it needs to change.
So many different entities need to come to the table, as you just pointed out, in order to fix this. It's not a one lever pulled and it's all fixed, including lower rates. Lower rates it's a good start, and that's great. But
Yeah, well, I think I heard actually this morning that just homeowners insurance has gone up 33% in the country in the last 4 years.
Wow. Yes, and then combine that with a 30% or 40% increase in car insurance. So now everything, not to bum everybody out, by the way.
It's not so bad.
That's right.
Yeah, well, but again, that's why I think us focused on this self-employed kind of underserved borrower, I think that's going to actually help, because so many of the young people today are starting their own businesses.
Right.
When we came up, you couldn't start your own business very easily. Now you can get online and have your company formed in 15 minutes.
15 minutes. And never leave your home to run your business.
Absolutely.
You do everything online. You ship any product you want. You can sell things. We talk about it here on the show all the time. You can literally start a business right from your home office and never even touch the product.
Right.
You know what I mean?
Yes,
it gets drop shipped someplace else, and you've become kind of a broker or a middle person, and it's very exciting times.
And the world is going to get a lot more like that.
That's right. That's right. And then when you throw AI in there in the mix, it gets really exciting.
Right.
For sure. That's fantastic. Has AI played a role in lending yet?
AI helps us with efficiencies.
Okay.
It helps us create the widget a little more efficient and quicker. Okay. So that part of it does, but it's not taken hold in many other parts. We are very much in the people relationship business where people have to trust who they're doing business with and who they're making one of their biggest financial decisions of their life, who they're using, not that interested in talking to an AI agent about that.
Yeah,
so,
for
sure. I do want to say though, for those that maybe aren't looking for a new home, but they're sitting on record amounts of equity, that is one of the biggest things that's happening right now in real estate. The last number that I read recently was there's $12 trillion of what's known as tappable equity in the country, which means if they tapped into this 12 trillion, there would still be a maximum of an 80% loan to value.
Wow.
So we're not talking about even tapping it fully,
Right.
but one of our fastest growing products is a bank statement, self-employed borrower bank statement, HELOC.
Okay, nice.
Because they already have the house, they have all this equity, but how do you get it?
That's right.
If your tax returns don't support it.
That's right. And that must be a new product, because I don't remember that back a couple of years ago, but that is a great product, because the same principles apply for that small business that wants to grow and have a reasonable rate, rather than going to some of these other types of loan companies or what have you. And of course, if you go to a bank, many small business owners know this, the answer is no.
Yes. Well, and the banks have really kind of, since the great financial crisis, they've gotten out of HELOCs.
Yeah.
They just, you used to walk in and they just give you a $100,000 line of credit, send you with a checkbook and charge you $25.
That's right.
Well, when the crash happened, everybody started trying to tap into that, and they realized, that's been shut down. And
that's right.
So they don't do a lot of those anymore.
Right.
So we've brought that to market, and that's been a big winner. And
I bet
our customers that had maybe done a loan with us a few years back have now come back and said, hey, let's do a HELOC.
That's right. That's right.
Yeah, and it has the flexibility of paying it up and buying it, just however you want to manage it. It's your line of credit.
Right. And you guys, you're headquartered here in Atlanta, right?
Right here in Atlanta.
But do you do loans all over the country?
We are in 46 states.
Okay.
Yeah.
Great.
There's a couple that we don't, but yes, all the big ones.
Okay. That's great. That's great. And I would imagine they go through brokerages or
I would say anybody who, really should just, whoever they've gotten a loan for, or whoever they know in the mortgage business, they know about Angel Oak.
Okay.
And if they don't, then they need
they
need the lenders themselves need to get to know us, because there's such a need.
That's right. For the people that are watching, though, they could probably go to Angel Oak and you could tell them who the brokers are in that area.
Absolutely.
Right. So that's an advantage. That's an advantage. So how are you feeling about the balance of 2026?
Well, I wish you'd asked me that 3 weeks ago, because I was feeling great about it.
I know.
We all? For the reasons you've already discussed. A new Fed chair who maybe is going to have a little different take on things and looking to ease things. I'm still hopeful that the talk about this war is that it's a short term, get in, get out.
Right.
And if that happens, then I feel great.
We're
about
good. Yeah.
And if it doesn't, we'll still adjust. I mean, the thing that I always tell people is majority of Americans prefer to live inside. So housing and mortgages is a good place to be.
That's right.
Now it's certainly not just a continual improvement, because economic factors that are out of our control and things happen, but the mortgage business is very healthy, and housing is as well.
That's right. That's right. And we should also say that many small businesses are having, they had record years last year. They're having there's very lot of bright spots, in the landscape for small businesses out there.
Yes.
And those people need mortgages.
Yeah, they need mortgages, and housing is a great way to grow wealth.
That's right.
That's been proven.
So for those of you that are listening to us have this discussion, and you're a small business owner, you're looking to purchase a home, or maybe, to his point, get a HELOC on the home that you're in right now, Angel Oak is a great solution for you to check out. I happen to be one of their customers, so I can tell you they do a really good job. They do it quick, and they're reasonable, and so it could be a great avenue for you to go for getting that next house that you want, without having to drag in a whole carton full of tax returns for the last 20 years and try to prove to a banker that, no, you really do have a good, strong business. So Tom Hutchens, president of Angel Oak Mortgage Solutions, thank you so much for coming.
Thanks, Jim. My pleasure.
Yep.
Thanks for watching Business Trends Today exclusively on ASBN.